What if I told you that the wrong move could cost you and your spouse over $250,000 in Social Security benefits? Well, in today's Financial Freedom video, we're going to be uncovering the smartest ways married couples can maximize their Social Security benefits, so stay locked in. Hi, my name is Carson Graves, Certified Financial Planner and President and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. We want to welcome you back to our channel. Well, Carson, you noted that the difference between the best and the worst filing strategies for married couples could cost them about $250,000 or more just by picking the wrong filing date.
Yeah, Andrew, unfortunately, that is correct because when it comes to a married couple, it's really not about the ages, but it's about coordinating the benefits properly in order to get the most out of that strategy. And unfortunately, when we're talking about these benefits and people are talking to the Social Security Administration, the government and the people that you're speaking with, they're just not equipped to even tell you about the strategies that you need to do in order to maximize those benefits, which is why we do these type of educational videos.
Okay, Carson, so if a couple had a choice of getting an extra $250,000 of benefits from Social Security versus not getting it, why wouldn't every couple take that?
Yeah, Andrew, you would think that everyone would take the extra $250,000 of lifetime benefits once they actually knew that it was available to them. But unfortunately, Andrew, most people are not able to realize those lifetime benefits because mostly they don't even know that it's on the table. When it comes to filing for your Social Security benefits, Andrew, as a married couple, it's really similar to flying a plane with two pilots. If the coordinations are off with those two pilots, both of those pilots do have control over the plane, but they can end up crashing that plane if their coordinations are not correct. So today in our financial freedom video, we are going to be breaking down the best filing strategies for married couples so that you can get the most out of this benefit. And I want to encourage you to stick around to the end because I'm going to be giving you a moral of this video that's going to be very compelling on why you should really take these matters very seriously. Now, before we transition over to our teaching slides, there are always two rules that we like to give you. And Andrew, what are those two rules?
Well, rule number one is to never run out of money, and rule number two is to never forget rule number one.
Okay, so let's go ahead and jump into our lesson today to talk about the best filing strategies for a married couple to maximize your Social Security benefits. So, I recently did a video about how you can get the best filing strategies and maximize your Social Security benefits for a single person. But today, of course, we're talking about for a married couple. And so we want to first, again, start out with the basics to understand how you can get the maximum benefit as a married couple. So when it comes to being a married couple, you certainly have multiple ways that you can claim for those benefits. One of the things you do have to understand is that, yeah, you do have your own work record that you can claim benefits on, and it's based off of your highest 35 years of earning. But if you do not qualify for Social Security, if you are a spouse of someone who does, you can claim up to 50% of your spouse's Social Security for retirement benefit, even if you have your own, if it's higher than your own. So you can literally have no benefits and get 50% of your spouse's, or you can have a benefit of your own, but it's lower, and you can get what is known as a spousal boost to equate to 50% of your spousal Social Security benefits at your full retirement age. Another thing to take note of is that you do have survivor benefits available to you as well. If one spouse passes away, the surviving spouse will get the higher benefit of the two benefits. So if you had a benefit where you were getting $2,000 per month, your spouse had a benefit where they were getting $3,000 per month, you will step into that $3,000 per month benefit. So the question here is for strategy and how you maximize these benefits as we ease into this is that when should the lower earning spouse file? One of the things to consider is that if you are the lower earning spouse, your benefit is lower anyway, so delaying it might not increase it by that much, so you probably should go ahead and file. When you decide to do this, it's going to allow the higher earning spouse to delay their benefits longer for maximum growth opportunity as well, because there is some income that's being infused into the household. Another benefit of this is that when the lower earning spouse have started their benefits and the higher earning spouse is waiting, when that higher earning spouse actually turns on their benefit, you can then switch to a spousal benefit if it's higher than the one that you're already receiving as well. So let's go ahead and take a look at this example that we have on the screen here. Let's say that we have Maria and James here. Now, James, he's a higher earner and he's expected to receive a $3,000 per month benefit at his full retirement age. Maria, who worked only part-time for much of her career, she's still eligible for a $900 per month benefit at her full retirement age. Now, if she delays her benefit past her full retirement age, of course, she'll get those 8% annual increases on her benefit. But 8% of $900. We're only talking about, $72 more per year when we're talking about delaying that benefit. Here's what we would surmise for Maria to be maybe a better thing to think about. Go ahead and perhaps file for those benefits at age 62. Get some income coming into the house. If you're not making more than the Social Security earnings limit, that'll get Maria about $630 per month. In this case, it is to be known that her benefit and her future spousal benefit will also be reduced because she started those benefits at age 62. These are things that you have to think about. But what is this going to do? It's going to allow James to continue to perhaps delay his benefit to age 70. And that could grow to about $3,720 per month. Now, to make sure you understand this clearly, Maria is now eligible for 50% of James' primary insurance amount, which was $3,000 per month. Not 50% of this amount. Is 50% of $3,000. That's what he would get at his full retirement age. So she doesn't get 50% of the delayed retirement credit amount. So Maria would be eligible for $1,500 per month as opposed to her $900 per month benefit that she's currently receiving. But as we noted, Maria claimed her benefits early, and so her spousal benefits will also be reduced accordingly. So that benefit, this is something that's really need to be known. If James took his benefit early, his reduction would have only been 30% at age 62, but because she filed for her benefits at 62, her spousal reduction is 35%. So instead of receiving that $1,500, Maria would then only be eligible for $975 per month. So when it comes to calculating what Maria's total monthly benefit would be, we would look at her own reduced benefit of $630 per month. Then what we would do is take a look at her spousal boost benefit of $345 per month, giving her a total monthly benefit of $975 per month versus the $1,500 per month that she could have been eligible for if she had waited to her full retirement age. So in that last example, it may have seemed like it was counterintuitive for Maria to file for those benefits early, but that brings me to my next point about maximizing your benefits as a married couple, why delaying those benefits really could matter. Now, if the higher income earning spouse passes away first, this is where this strategy really kicks in and come into play. The surviving spouse is going to get the higher of the two benefits. That means delaying those benefits up until age 70 is going to lock in the highest possible survivor benefit. Now, this is going to be especially important if there is a significant difference in earnings between the two spouses and age differences as well. So with so many things to think about here, what would possibly be the best strategy for you? Here's how you have to think about this. If you are the lower earning spouse, you might want to consider filing for those benefits early, perhaps between the ages of 62 and 65, and then switching to your spousal benefits, which may be higher later. If you are the higher earning spouse, delaying until age 70 for maximum benefit potential for survivor protection could be important. Just keep in mind the thing that you want to remember when it comes to maximizing your Social Security benefits as a married couple is that this is a huge decision for everyone. And choosing the right timing can literally make a six-figure difference in your retirement income. So definitely choose wisely.
All right, Carson, so what's the moral of this video?
Yeah, the moral of this video is that when it comes to Social Security benefits, especially for a married couple, don't leave money on the table because the decisions that you make today can leave a lasting impact on your financial future tomorrow. By understanding how to optimize your Social Security benefits as a married couple, you're not only maximizing those benefits for yourself, but you're also maximizing those benefits for your spouse that you leave behind. And as always, we would like to hear from you in the comments section below. Let us know if you are considering ways to maximize your Social Security benefits as a married couple. And as always, when it comes to these particular matters, make sure that you speak to a certified financial planner in your area.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.